All right, welcome back, everybody. Okay, so let's take a look at my trades here for this Thursday, April 20th, 2023. So we're going to start off with a couple things. Just a really good day overall. And so let's go over just a couple of the trades here. You can see, everything. I traded a little bit of the E-mini S&P. I traded some gold. I traded the mini Russell and traded natural gas. Every single one of the trades were profitable. Once again, just using the patterns, I'm trying to go ahead and label these entries, kind of giving you an idea of what I'm looking at, because I do have a series of patterns that I look at. And once again, these patterns are very unique. Okay, so though this has nothing to do with support and resistance, this has nothing to do with some of your classical chart patterns. These are not head and shoulders, cup and saucers, pennants, blah, blah, blah. It has nothing to do with that. No Gann. Has nothing to do with Gann, has nothing to do with Fibonacci. These are basically price action patterns. So what do I mean by that? So before we get into it, let me just explain to you, basically the market is kind of like an alphabet. Think of all these bars as kind of like letters, all right? And so every single one of these letters do tell us something different about what is going on at that particular time, okay, in the market. So you can see, obviously, in this situation over here, you see all these red bars coming down. Obviously, this means that the market is being pushed down. But every single one of these bars tells us a little bit of something. Like, for instance, you see this red bar comes up, it goes down, it comes back up. You had a little bit of price rejection, right? Went down, didn't like it came back up, but then we went ahead after coming back up, then they finally pushed it down, pushed it down, pushed it down. So every single one of these bars is like a letter, all right? And every once in a while, and this is it, and trust me, it took me a long time to find this, is that eventually what will happen is as you start watching this, every once in a while you'll have 3 or 4 different letters come together, and it tells you something, all right? So think of it as a word, right? So you may have a C, and then you may have an A, and then you may have a T. I'm just kind of giving an example, and that spells cat. And that's basically what my research was involved in back in the 80s, is I was looking for those words, all right? And they're buried in here. So in this case, what are we looking at? We're looking at the type of bar, each one of these bars, and we're looking at when you have 3 or 4 different bars that have different shapes, and it's repeatable, and it provides you with an indication of where the market is going to continue to go. That's what I looked at. So on a daily basis, what we do is we take the computer and we would analyze. We'd go back, 1, 2, 3, 4, 5, 6. We would look at all the combinations of every single one of these bars. So if I was, let's say, today I was doing analysis to see if I could come up with something for tomorrow, I would look at this bar, big bar, right? And you get some price rejection on the upper side of the body of the candle, and you get a little bit of here, and then you have almost like a little doji down over here, and then we have another one here, but this low was lower than the low of the following day, and then the following day was lower than the last 2 days. So all of that we put into the computer, and we crunched it, not only going back, 1 day back, we'd go back 2, 3, 4, we'd go back 10 days. And then if we found something that had a high probability of predictability, then what we do is we take that same pattern and we would run it against other markets. So if I was just looking at gold and I found something that says, wow, I've got 70-80% probability the next day after this big bar is going to be a green bar. In other words, it's going to open and close higher, right? So what I'd do is I'd run that, and I would look at currencies. We would look, everything. We'd look at some stocks. We would look at, things like pork belly, sugar. You name it, heating oil, crude oil. And when we found, and a lot of times we found absolutely nothing. So even though it may have shown predictability in gold, if it didn't work in other markets, we didn't we didn't make a note. We did not. That was not something we were going to use moving forward because I want to find those words, okay, or that combination of bars that have a high probability, okay, in every single market. Because let's face it, we're all humans. Everybody is human that trades the market, right? Yes, I know you do have some program trading and stuff like that. But in most cases, all right, the alphabet is still there. You just have to be able to find it. And so we don't have a lot of them, but we have enough in order to be profitable because I know that they're universal. I know that these combinations that I have found, these patterns, one we call the pairing pattern, works across the board. So I can take this pattern, look for it, and then I can come in, and if I wanted to trade silver or if I wanted to trade the E-mini S&P or whatever, if I saw this pairing pattern develop, it gave me a high probability of telling me where the market's going to go. All right, and so that's basically what this is. So in gold today, and I'm just going to go through a couple here because it's all pretty much the same thing. I have four different patterns that I look at. Okay, that's it, just four. I have a total of, overall we have 6 that are highly reliable. All right, there's not a lot. That's why it takes a lot of time to find them. All right. So anyway, so we had a nice little short entry. It was what we call a pairing pattern. And it gave me an entry, and the entry came in somewhere around, I think it was 1038, 1039. We went ahead, we entered the market short, and then once we get that set up and we get triggered on the short, then we run something called Einstein. Now, Einstein is basically a formula that is very similar to trying to a lot insurance companies will use them. You know, a lot of people have looked at how do we predict how far something is going to travel if it reaches a certain velocity or speed, right? So whenever there's an accident, the actuaries for the insurance companies are going to look at all that. The police are going to look at that. They're going to look at the skid marks, and they're going to be able to tell how fast you're going based on your skid mark, right? All that factors in. Well, this gentleman back in the middle 80s came up with a formula that basically does the same thing. What he noticed is that once the market starts to move and it hits a certain velocity, and he factored other things into it as well, then once it hit a certain level, or speed in this case, there was a high probability that was going to go X distance with a very high probability, in this case over 70%. So in this case, when we got a pairing pattern, all right, and we got our pattern that says short, then we ran Einstein and says, okay, based on this, we have a very high probability that it's going to come down to this target. Okay, so we put a stop up here someplace, and it has a very high probability of hitting this target, and that's basically all we do. So it's very simple. I have 4 patterns that I wait to develop. Once the pattern is developed, then all we do is we run Einstein against it, and we see what those levels are, and we get in, and we just wait until it hits that level or it hits our stop. All right, so we have a total of, like I said, 4 different patterns that I'm using. Sometimes we have multiple patterns setting up, and you'll see that more when I'm trading stocks. When I'm trading commodities, when I'm trading like gold and silver, I'm trading the indices, okay? I just go for the very first target. Do I need to go? Could I go for additional targets? Yeah, a lot of times there are multiple patterns that are setting up, okay? But because we have such good volatility, all I know is that if it hits my first target, I'm going to do quite well with that. So I don't need to try to hold it forever. Now, every once in a while, I may do that. I may go for target number 2 or target number 3. But in probably 98% of the time, I'm going to be getting out at that very first target. Okay, so hopefully that makes a lot of sense. All right. So, anyway, I'm trying to think what else I was going to say about this. And so it's a fairly simplistic way of trading, because I don't need to worry about these patterns. The patterns are set in stone. It's not something I need to go and keep tweaking all the time, right? And I don't have to worry about, is the pattern, if I decide to trade this pairing pattern in a particular stock or maybe a crypto, right? Do it with cryptos. We test it with cryptos, same thing. Or maybe you like to trade, Forex. You like to trade the currencies. It works there as well. So I don't need to worry. I don't need to be concerned about all this. All right. And because they have held up for the last 35 years, I'm pretty confident, okay, in that they're going to continue to hold up because, there have been so many, it's been repeatable so many, in the thousands, okay, that I don't really need to worry about it falling apart, okay? And I just don't really see how it could fall apart because just of the way that the patterns are developed, all right? So, and then as far as Einstein, Einstein is really based on pretty much physics, if you want to put it that way. And that it's pretty solid within itself as well. So I just have two simple things. I don't need a bunch of indicators on here. And, a lot of people get upset. I tell them that I don't like indicators. Well, see, the problem with indicators, folks, is that let's say you're trading gold and I'm just going to use very simplistic indicators. I don't want to get into Bollinger Bands and Max and all that other stuff. You want to do that, that's fine. I'm talking about something as simple because this is going to apply with any indicator that you have to optimize. So let's say that you go back 20 years in gold and you found out that the 20-day moving average is ideal. You ran your numbers, it shows you made money, blah, blah, blah. All right. Then what you do is you run it forward for 2, 3, 4, 5, 6 months. All right. And see how well it does. Well, the problem is we never came up with anything that would ever hold up, even after we ran it for going back as far as we possibly can. It wouldn't even hold up for 30 days out. Why? Because markets don't work that way. All right. A moving average doesn't really tell you anything. And where you really get hit, you always see these charts where the markets are moving really good. You see the moving average and it looks so smooth. But where they moving averages get chopped to death is in markets like this. All right. And the other thing you don't realize a lot of times is that, let's say the moving average is coming down and it's going right here, and you think that you bought it down here, that at the end of the day you say, wow, I would have bought it down there. The problem is at the time that it hits that moving average, it could go up, it could go down, it can go above, it could go below, and it will just keep gyrating. And if you bought it and got out every single time, you would lose money. You don't ever see that because all you see is the end result. You see the close, right? So that is the problem with any kind of moving average. And besides, if it's something that has to be, quote, optimized, meaning that you have to change the value of it to get it to fit with every market, all right, the odds are that if you went back 20 years in silver or the S&P and used the very same value, all right, it doesn't hold up. So why do you want to trade an indicator that's not universal? Okay, so if you have an indicator that's universal, we're talking about a totally different story. But the beautiful thing about patterns, I don't have to worry about the pattern coming up, down, and all that other nonsense. The pattern gives you a very specific buy now, sell now, period. There is no, don't have to sit and wait, don't have to wait for it to gyrate around. It's very clear cut. You're not going to find that with an indicator. And anybody that's been trading indicators knows what I'm talking about. And the other thing I see happen a lot, and then we'll get to but I just want to talk about this because this is really so important. I have been a 40-year trader. Trust me, I've seen all of this. And the majority of people, they get sucked into believing that they see these people on the internet. They say that they're making money, and some do. And you see all these lines on their charts and everything. But folks, they're not making it off of the indicators. They're making it off of price action. They're watching price action. They're seeing what the public is doing, and they are reacting to it. It's not the indicator, okay? It's what people tend to do around the indicator. And I promise you, the commercial the commercials, the big funds are looking at the same thing, and they're taking advantage of what the public is doing because they know the public is typically always wrong. All right, so they're going to take advantage of that. But the other thing I see people do is they say, well, you know what, but Ken, gosh, if I use the moving average and I also use the Bollinger Band and I also use the MACD, and they all line up, man, I should have a nice trade. What most people don't think about is that if an indicator is good, folks, it should work by itself, okay? It's like I compare it to an engine that's running really smooth and one of the spark plugs goes out and it doesn't work, and you're thinking, well, heck, I'm going to put 2 other spark plugs in there. I'm going to replace that dead spark plug with 2 dead spark plugs because, gosh, if the engine's not running because one's not working, heck, I'm going to put another dead spark plug in there, and you think it's going to keep working. It doesn't work that way. The spark plug either works or it doesn't. So when you're trading, think of it that way. Does this spark plug, this indicator, does it work by itself? If it does, you don't need 2 or 3 different indicators. Why would you? But if it doesn't, why do you think using another indicator that probably doesn't hold up by itself, you're putting 2 of them together that don't hold up by themselves? Now, a lot of people argue, well, blah, blah, blah. You know what? Show me in real-time trading that you can use the indicators and that you make money. I have never known in my 40 years of trading any successful long-term, I'm talking about long-term, that have stayed in this business using indicators. They're all price action traders. All right. And I have seen people on the internet that are very good traders. They're price action traders. All right. Yes, you may see a lot of fancy lines on there. A lot of it is just because people love to see it. But when it comes down to making money on a day-by-day basis, all right, it's price action. And the only way you're going to learn price action is not with some indicator. It's not even with some pattern, though the patterns will certainly put the probabilities in your favor. There's a lot of other things that come into play to become a successful trader. Controlling your emotions, believing in the tools that you're using. I believe in these tools, all right? That's a huge difference. I know these work. I don't have to question it. Okay, that's a huge hurdle just to get over just right there. So I have tools I know work. Now it's up to me to execute, all right, and play out the plan. And a lot of people are afraid to execute. They're afraid to play out the plan. They're afraid to take a loss, which is a huge thing. Folks, the best you're going to do long term, and if anybody tells you different, have them prove it to you, that they're going to be right more than 75, 80% of the time. Not going to happen, okay? Because there's an element of noise in the market. So, but think about it. If you're right 70% of the time, that means you're even on 10 trades, you're probably going to have 3 losses, okay? You may have 5 losses on 10 trades. Think about that. 5 losses on 10 trades. But at the same time, what happens if it's 5 losses over 20 trades? So you may have 5 losses on your first 10 trades, and then the other 10 trades are all winners. You see what I'm saying? So you have to think of things in big numbers. So just because you may have a couple losses in a row doesn't mean everything's falling apart. And the reason people get scared is because they don't trust in what they're trading with. And that's number one. Number two, you have to understand the reason behind why a particular pattern, okay, why does it work? What's the logic? Is it based on something sound? Is it based on what I call truism about the market? Not the market that I'm in, but all markets. And there are truisms within all markets. All markets have a set of principles that work in everything. And those principles always have been, always will be, once you understand what those principles are. All right, that's enough of my lecturing. I wanted to just let you guys kind of know that trading is a lot of it, yes, having good tools, but also a lot of it is the psychological, which is probably even more difficult for most people. All right. So anyway, that being said, nice little trade on gold. Let's take a look at the mini Russell, because I did have several trades on the mini Russell, and we'll show you what that did as well. Just going with the patterns. Okay, so here we go. This is going to be the Mini Russell. Picked up $234 on that. And basically, this was a very simple, what we call an HF3 pattern. We have 1, 2, and 3. And then we also have the pairing pattern. So there's my 4 patterns that I use. And this was an actual, what we call an HF3 buy. So we had the HF3 buy, had a profit target. I don't think I was in this trade more than probably 5-6 minutes. It hit my target, and I ended up making 234. Had the same thing. We did pretty much the same thing with the E-mini S&P, and we actually had 3 in the mini NASDAQ. So we bought it, sold it, and ended up taking made a profit on that. It turned around, had a short pattern setting up, and I can't recall which ones they were, but it's all these I do talk about in our live trading room. So some obviously you've seen me make during the first hour trading. If you're a non-subscriber, the subscribers see me making these calls and trades in the morning and throughout the day if I see something I really like. But typically I'm trading usually within the first 3 hours. But anyway, so then I turned around and I sold it, okay, and made a nice little profit on that. That ended up being one of my better trades for the day is on the mini NASDAQ. And of course we did some natural gas. So we sold the natural gas, we bought and got out, and then we ended up getting another short on the gas, sold it and got out. So nice day on natural gas. So overall, just trading just commodities, nothing else. Trading a little bit of gold, which is my favorite. Trade the Mini Russell. Actually, these are my 2 favorite. And I do like gas. I do a little bit on the E-mini S&P, but it's kind of a slow mover. The NASDAQ can be a wild animal, but I do like it because it can really, knock out the profits when you're in the right side. Sometimes, you get hit, so you got to be careful. It is kind of a wild animal, but I do like it. Nonetheless, 2367 is not a bad day. Just using a few patterns and using Einstein to give you my profit targets. All right, so once again, if you think this is something that would help in your trading, first of all, simplify the process and have what I call these universal patterns. I do teach these, okay, for those that are interested in truly learning, all right? And keep in mind that, once again, it's like anything else. Profits are never guaranteed, folks. It gets down to you as an individual, all right, how you use these tools. These are tools. They're not guarantees, all right? So I kind of like, I compare it to a carpenter. A lot of people are out there and they want to build a house, so they're going to go out, they're going to buy what they, they're going to buy some of the best tools, and all of a sudden they think because they're using the best tools, they're going to go out and build a beautiful house. And it doesn't work that way, and so don't be scammed by all this junk on the internet, okay? The tool is not what's going to make you a profitable trader. Yeah, there are tools that you want to use, and you certainly want to use tools that are reliable and that will hold up. But you still have to work at becoming a good carpenter, right? You have to still learn how to use those tools so you can perfect what you're doing. Having good tools make it a lot easier. If you're not using reliable tools, it's going to be you're going to have a very difficult time making money long term because your tools are going to keep breaking down on you. All right, that's not what you want. So if you're going to focus on trading, I would focus more on pattern trading than I would trading with indicators. All right, trade with tools. All right, don't trade with indicators. That's just my recommendation from somebody that's been doing it for 40 years. But you know what? It's all up to what you feel comfortable doing, and if you are dead set on using indicators, then by all means use your indicators. All right, so let's see how we did on stocks. Let's go over and look at stocks, and we're using the same patterns again on the stocks. All right, so let's take a look at our stock trades today. So those that joined us during our first hour of trading know that I did get into CFRX. Entered, it was around 8:30. These are, of course, Eastern time. This was actually, I don't know if you can see that, but it's an HF, okay? I love HF. It's one of my favorite patterns. It's HF, very, very strong pattern. But then we also had some additional patterns setting up, and I had 2 additional HFs. And some of them were projecting much farther out, all the way up to about 240. Okay, but I had this little bit of cluster in here, and I like to see, and here's a little cluster right here, I really like to see when I have multiple patterns setting up and they're all kind of hitting the same target, all right? Because they're all different patterns, all right? Sometimes we have longer term patterns that are going to project out a lot further, but at the same time, it could take longer to hit those targets. So typically, the farther out that I go in terms of my target, the longer I have to hold on to the trade, but not always. So this is a really good example. So here's an HF1 buy that came in. I bought in on this trade. I got in at 832, all right? And I was getting out right around 902. So I held on to this for a while after I entered, all right? Because what I was looking for is, yes, it blasted through 1, 2, 3, 4. That's really where I should have gotten out. But I held it because as this was developing, okay, I started seeing other patterns popping up, and they were projecting additional, okay, levels at this market. So I was thinking, man, I'm going to ride this thing probably all the way up. But when it came back up to this level again, it started to falter a little bit in here. You see that? Of course, you never know what's going to happen in the future. That's when I went ahead and I exited my long. And I still ended up having a really nice day. It wasn't the best trade I made, but still, I made a nice little profit on CFRX. All right. Also did a little bit on AUGX. AUGX, ton of volume on AUGX. It was something that I would have had to really play earlier in order to really get a good piece of it, but I did not. Okay, I did not see it until one of my students in the live chat room pointed it out, and so I was able to catch just a little bit of it. YANG was just kind of slowly moving up all day, and I didn't really do anything with it. I did see it on the radar first thing this morning, but I just kept seeing it hitting new highs. My scanner kept telling me it's going up. So I finally waited, saw some nice patterns, got in, and that ended up being my best day. But let's take a look and let's see what the heck happened to UHC. Let's take a look at that real quick here. All right, so let's see what happened with UIHC. So first of all, I wanted to show you a couple things, and this was really not on my radar until the very end. And once again, this was another one of the traders in the room that pointed it out, and so I really jumped into it a little bit late. But I wanted to show you that when I went back and I looked, we were getting this was right here. This was an HF1 buy. Okay, that was an HF1 buy right there. That was a target. We also had some additional patterns setting up. I think there's two additional there. Yeah, we had two additional patterns setting up for buys with a target right here and a target right there. I did not enter this, all right? And that was early in the day, all right? So I could have ended up doing very well. Some of my students did very well on this because they caught it early. Once again, this just wasn't on my radar, all right? But later on in the day, I ended up getting what we call an HF2. This was an HF2 buy right here. This was an HF2 buy, all right? And I'm showing it in a white line because that's where the buy came in. Look where I got in. I ended up getting over here, got in late on it because I really thought that it was going to take off and shoot up to this higher level of 294. Well, it did not. And once it started flushing, started hitting this flush and it came back down to what the entry should be, I got out because I saw a bunch. I looked at Bookmap. And I could see that there was a lot of selling coming in, and so I just went ahead and got out, took my loss. Now, one thing I did, okay, is when I got into this trade, I didn't go real heavy because first of all, I missed the entry point. So I don't want to go in heavy if I miss the entry point because this was probably chasing the market. All right, because when I got in, when I saw that I had missed the entry, okay, it was like that fear of missing out, right? We all deal with it from time to time, particularly since I was hitting it really good, doing very well for the day. Sometimes you get a little bit overconfident. Yes, we still do it after 40 years of trading. And I thought, oh my God, this thing's going to go, because none of them were, everything was hitting the day. All the patterns, I figured, okay, yeah, this one's going to go, and I'm going to get up here to this level. But when it flushed and I saw selling coming in on Bookmap, I went ahead and got out. All right. So still, overall, traded 4 stocks, probably more than I should have been trading. But nonetheless, still had a very, very nice day. And I do highly recommend, as a trader, unless you've been trading for years and years, it's very difficult to trade several things like I do. I'm really good at multitasking. And since I have a lot of experience with commodities, and I have a lot of experience with Forex, which I didn't do any, no, I did a little bit, later in the afternoon, but I didn't really put anything on that, that really, I mean, I think I made like, I don't know, 20, 30 bucks. It wasn't a lot. I was trading in the yen. But besides that, I didn't do a lot, and I haven't done a whole lot in the currencies. But, what was I going to say here? But yeah, so you don't really want to take on too much. All right. So stick with just 1 or 2. If you find a good, if you love trading stocks, find one that's really heating up, right? Use your scanners and try to find those stocks that have low flow. Look for the movers, see where the interest is, and the key is just trying to get on board early enough. But be careful, because a lot of these flush pretty hard, like this one did over here. So you always have to be ready to get out. Don't walk away. I promise you, walk away, you're gonna get slaughtered. So be 100% focused when you get on these trades if you're a scalper. As far as the commodities, I really like the indices quite a bit. So if you don't want to trade individual stocks, I really love indices. I've started off trading the S&P 500 back in the 80s when it was $500 a point. It was a monster. And so it was easy to make 500, but it's also easy to lose $2,000 if you weren't paying attention. So, anyway, you don't need to trade, okay, as much as you see me trading. That's something that I highly do not recommend. Get it down, trading one at a time, get profitable. Then you can take on another one, whether it be another stock or be something else. It's very difficult to manage, okay, 2 stocks unless you have the experience to do it. Do not recommend it. And also, as always, never trade until you can prove that you can do it in real time. So get yourself a simulator or get yourself a demo account and practice with that, okay? Don't go crazy. Start off with, maybe 100 shares on the stocks or 200 shares, and just whatever you think that you would be able to trade with, and just work your way up. Impatience will kill you, and everybody wants to make the money that they see all these traders make on the internet. And it's just not going to happen overnight. You're going to end up destroying your account. You're going to blow out. You're going to get frustrated. You're going to think this thing doesn't work, and you're going to give up. All right? Just be patient. Take your time. It will pay off, but you got to put in the time, okay, to do it, just like anything else, right? Everybody wants to have the salary of a doctor, right? But, how many years of schooling do they have to go through? How many hours do they have to, study? I mean, how much do they have to give up of their personal life, all right, to make sure that they did well in their grades, all right? They put in the time. They just didn't become a doctor overnight, all right? They put in a lot of time. So if you want to make big money, if you want to make, quote, whatever big money means to you, then you got to put in the time to do it, all right? Don't be scammed into thinking you're going to be making thousands, okay, out of the gate, all right? It's just not going to happen. Got to have some years of experience behind you, and always go slow. That's my recommendation. Look, everybody have a good day, and we have one more day, Friday, and hopefully tomorrow. Sometimes Fridays can be choppy. Sometimes they're really good. Hopefully tomorrow's going to be a good day for us. We'll see you then.